actually start this time with the state of New Jersey. There was a $1 billion+ deal from New Jersey's Economic Development Authority. You do hold some of that debt. Any concern with any debt in New Jersey now that there has been a downgrade and there are some concerns about budget strains there?
I think, again, we look at things from a relative value perspective. So I think there's concern in terms of New Jersey, in terms of potential further downgrades. That being said, again, we look at it from an overall perspective. If you look at wealth levels in the state of New Jersey, there's some of the highest wealth levels across the country. They have not met budget expectations. There are some fairly aggressive revenue projections for next year's budget. But again, I think if you look at it on a relative value perspective, spreads have widened. Not last week, in fact. Last week and this week, I think the deal was pretty well absorbed by the market, but I think that's a reflection of the fact that there's just good demand out there. So, in certain parts of the curve, with New Jersey trading anywhere from 70 to 100 basis points higher in yield than the AAA scale, I think some of that is already priced in, and barring downgrades to low single A area, which we don't see, we think relative value in certain parts of the curve actually looks okay.
Have you added to your holdings in New Jersey?
We did not participate on the deal that came this week. I think that was a school construction funding deal, but we did participate a little bit last week, but we've had more activity in the secondary market. We found better value in the secondary market. A few weeks ago, we added some on a secondary market trade where you had a period of time where the market got pretty weak. You saw 5-year munis sell off probably 30 basis points in a matter of 7 to 10 days. And we were able to pick up some paper during that time period.